In today's video, I'm going to share with you a fund that I'm buying that beats Cornerstone and could potentially beat Yieldmax funds. So let's go check that out. We earn over $100,000 per year in dividends at this channel, as you know, okay? And my performance value shows that we're up now 35% for the year. No, 33%. I apologize. 33% is still beating all the indexes. And on a 3-year basis, it shows that we're up 98% over the last 3 years. Whereas the S&P is up a third of that. So we're beating all the indexes on a year-to-date basis, on a 3-year basis, and also on a daily basis. We're up 1.5%. Yesterday, we were up almost 2% as well. So look up above, you'll see that the indexes are up about 0.97%, the NASDAQ. So this may be a boring intro. I apologize. It doesn't have B-rolls and fancy graphics, but the numbers should speak for themselves. So we're living financially free here out of our brokerage accounts at this channel, and you can too. Email me for my e-guides at akintodd48@gmail.com if you're interested. So this is the fund that I bought today, okay? Again, it beats the S&P and it beats Cornerstone. And so it could potentially beat Yieldmax funds. We don't know how those are going to work. You please leave those comments in the section below if you can, or on Discord. But Cornerstone, as you can see today, we're up again another about 8K in Cornerstone. So again, that's most of our gains. You know, if we're up 10K, 8K is Cornerstone, and then the rest of my gains come from some of these triples that I told you I bought yesterday in the last video. How we're bouncing back stronger with certain Yieldmax names. OARC also, we've been buying that, and that's a strong bounce. That's seeing a strong bounce today. Okay, so that's like 500 of our gains. You know, so this is how we engineer stronger bounce backs, okay? And again, the fund I'm buying today should help with that need to bounce back strong with the market, okay? Now, it's STK without further ado, okay? STK, here it is, $5,000 in it. Now, the reason why I only have 5 in it is because it only has like a 7% dividend, a 6.77% dividend. But if you go to Columbia, look, it beats the S&P, it beats everything. Look, 75,000. It's not rated on Morningstar. But if you go to Columbia, STK on Morningstar, you'll see that, yes, it indeed beats the indexes, it beat the S&P. At least, okay, as far as as far as indexes go, I think this is tracking perhaps the NASDAQ, and so it looks like it's in line with the index there. The index being the maroon and STK being the blue. So it had a nice pullback, that blue, and it's been tracking even since the past peak in this index that is tracking this growth index. It still managed to claw its losses all the way back. So I like how it wasn't experiencing too much decay. So that was promising for Columbia. Now, the best part about Columbia is that its maintenance is, okay, there's the dividend, 6.77%. But the maintenance is 30%. 30%. So that's why I'm going for it, because again, to live financially free out of your brokerage account, you have to find low maintenance names that can still move upward, left to right on their chart, as you saw Columbia can do. Well, I haven't even showed you the chart. That's just the chart of the NAV and what the dividends and everything else does with it. But you can see there it moves big, okay, on a 10-year test. Okay, and I'll show you the chart in 1 second. So if you need help understanding maintenance, that's in my margin e-guide. Okay, so I have 4 e-guides. I have volume 1, fundamental analysis, volume 2, technical analysis, volume 3, how to live financially free out of your brokerage account using margin, and volume 4 is how to play Cornerstone properly. Cornerstone is our biggest fund here. It's our biggest holding, 500,000 in Cornerstone. But I'm adding to STK because obviously it's a high quality fund. And you saw the results there on a 10K test. Now let's go into a chart of STK. All right. If you need help playing Cornerstone, again, that's in my e-guides. So STK, because you have to play Cornerstone properly, you have to play it around its rights offering and ask for that special drip. Okay. If you don't know about the special drip, I'll show you at the end of the video. Okay. So STK, here we go. 6.77% dividend. I don't like that it's quarterly. Okay, that's one reason why I'm not always in it, but I'm in and out of this fund all the time. Look at the chart, perfect pullback. Let's go zoom into the charts and see what it's looking like under the hood. Okay, we need to see the true state of the technicals for STK. And so here we go. You know, we're having a bounce here. Okay, but look, we broke below the 200. But we're finding support at the old channel here. Okay, so this area was a prior consolidation area on the chart, and we're right back down to that area, which looks like a blessing. And also we're oversold, extremely oversold on the RSI. So this is you know, usually when things are oversold, you get a bounce in the stock because it's had its breather and it's ready to bounce back. So this stock moves upward, left to right. If you look at it on a chart, 5-year chart, you can see it was a big mover. Okay, so it can be a high flyer even. Okay, so the 6 to 7% dividend is just icing on the cake for this fund. It's a big mover, to tell you the truth, and it's 30% maintenance again, which is the secret. As you can see, my available for withdrawal is still high. It's over 200,000, which means we can withstand over 30% market correction. And even if that were to happen, we have 20% dividends in Cornerstone. So we would, you know, only lose 10% there. We would 30% minus 20% is 10%. So I don't fear pullbacks. The shutdowns are always buying opportunities. You never fear such things. I mean, if that really were to happen, it would be bad. But guess what? I mean, you just buy the dip. I mean, because eventually things will get better. And if they don't, then money doesn't matter anymore. We're all living in caves, or just we're not able to, you know, even use money. We're bartering after that. If the government shut down and things were really that bad, if they were just if it was just a minor correction, then again, and the shutdown was just temporary, that's a buying opportunity. So you shouldn't fear any of these things. You should just be able to worry about withstand corrections. Okay, you need to be able to withstand market corrections at least a 20% when you're using margin. Even when you're not using margin, you should look at your accounts and you should say, you know, what kind of drawdown would I have in a 20% market correction? And if you're tied to stocks like Yieldmax funds, then you could have a problem there. Now, I just showed you how STK beat Cornerstone. Yieldmax stocks, you know, we don't know. Again, the jury is still out on Yieldmax funds, but it looks like STK is a strong performer. Yieldmax funds are 50% maintenance. So if you look at, let's say, a Tesla trade right there, okay, if we find Tesla, we go to the snapshot here and click View Margin Maintenance Requirement, you see that it's 50%, okay? So 50% maintenance, that takes up half of my equity, all right? That's harder to live financially free out of a brokerage account with. And also, even if you're not using margin, that means that it's a riskier place. So you need to watch out for this fund because that's why it's a higher margin maintenance requirement, because it's riskier. So this is the way that I use maintenance, okay? So also, you know, if the interest is being beat with STK, then I don't mind holding this debt. So I raised my debt recently to 205. When I get dividends at the end of the month, that'll go down again. And I don't mind keeping my debt around 200 for forever, okay? Because the interest is so low. It's, you know, around 6, and when interest rates start falling, then my interest rate will fall with that. That's another benefit a lot of you guys haven't seen yet. But for all you subscribers here at the channel, and for all the members at Discord, you know, who have been negotiating your margin rates down, you're going to be able to just have your rate fall on its own, okay? Because as interest rates fall, then your margin rate falls with it. So that'll be a nice tailwind to your portfolio. So keep that in mind. So I'm keeping my debt at 200. I added STK for that reason. Okay, let me know, guys, what you think in the comment section below of STK. I need to show you one more thing. Actually, it's the drip. I told you. This is how I live financially free. Is the drip? Well, the drip is just icing on the cake. But I live primarily out of my account with Cornerstone. $8 market price there, as you can see, and it drips the dividends down at the NAV of 6 every month. 649, 23% gain. 652, 22. 627, 27% gain. So thousands of dollars, as I always say in each video, every month from both CRF and CLM. Okay, they're 5-star funds on Morningstar. I always have that ready, but today we had a video on STK. But yeah, Cornerstone CRF is a 5-star fund. and it tracks the indexes. So that's how I'm able to live freely out of my account. Is you just go with the S&P, because the S&P averages over 7% per year approximately. And so if you just tie everything to the S&P, you will be fine over time. But you need qualifying income, because the S&P doesn't give qualifying income to banks. You need dividends for that. So how do you get S&P exposure but dividends at the same time? Cornerstone. Okay, Cornerstone is that trick for me. 20% dividend and tracks the indexes. You just have to learn how to play it, and you have to time it around its rights offering, which on Discord I alert you of. Here's the Cornerstone rights offering section right here. Well, here's my daily portfolio recap, where I track all of my portfolio moves when I'm not on YouTube. And then we have our Cornerstone section, which right here, discussion only, but we have an announcement only section here. So that I or the over 400 members on Discord will alert you of the rights offering when it occurs. So that's how I'm getting ahead out of my account. It's through Cornerstone, 5-star fund, but STK, you have to admit it beat all the numbers that you've seen so far with Cornerstone. It beat the S&P, so you have to take a serious look at it. It just doesn't pay a large enough dividend for me to make it a bigger position, and it doesn't pay monthly, which I like for my monthly bills. So let me know, guys, again, what you think about STK. And again, if you need help living free out of your brokerage account, email me for my e-guides at akintodd48@gmail.com, and I'll talk to you soon. Thanks.